Aurinia Pharmaceuticals, ticker AUPH, is a biopharmaceutical company focused on autoimmune disease. Its main commercial drug is LUPKYNIS, an FDA-approved oral treatment for lupus nephritis, which is a severe autoimmune condition that attacks the kidneys and can lead to kidney failure. Aurinia is focused on expanding treatment options for patients with serious immune-driven diseases, and LUPKYNIS is currently its flagship revenue-generating product. But right now, AUPH isn't just moving because of biotech fundamentals. It's moving because it's become a high-momentum trading stock, especially attractive to day traders, swing traders, and options traders looking for volatility. Over the last several weeks, AUPH has exploded in trader interest due to a combination of rising volume, aggressive options buying, and surging retail attention on platforms like StockTwits and Reddit. This is exactly how stocks transition from being quiet mid-cap companies into volatility-driven momentum plays. One of the biggest forces behind this move is the options market. Traders have been loading up on call options, which are bets that the stock will go higher. When market makers sell those calls, they have to hedge their risk by buying shares of the stock. As the price rises, they are forced to buy even more shares. This creates what is known as a gamma squeeze, a feedback loop where price rises, forcing more buying, which pushes the price even higher. At the same time, AUPH also has real short interest. That means hedge funds and traders are betting against the stock. When price starts moving up quickly, those short sellers can get trapped. They are forced to buy shares to close their positions, which adds even more buying pressure on top of the gamma squeeze. That combination, call option hedging plus short covering, is how stocks suddenly go vertical. This is why traders are watching AUPH so closely right now. Social media sentiment has turned extremely bullish. Message volume has surged. Traders are talking about breakouts, options pressure, and squeeze setups. When that kind of attention hits a stock with a relatively limited float, price moves can become violent and fast. In a normal breakout, a stock might climb gradually to previous highs. But in a squeeze environment, price can overshoot dramatically. Stocks in these conditions don't move 5 or 10%. They can move 20, 30, even 50% in very short periods of time, simply because supply disappears while demand explodes. For the squeeze to fully ignite, traders are watching for a few things: strong volume, price holding above key resistance levels, heavy call buying above the current price, and no meaningful drop in short interest. If those pieces stay in place, the setup becomes more powerful. AUPH is now sitting at the intersection of momentum, options pressure, and retail attention, and that's exactly where explosive moves are born. This video is for news, entertainment, and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions.